NIO will be worth more than Tesla and Toyota combined. Breaking news. NIO stock has narrowed down around 75% from its all-time high last year, but with the EV maker still achieving strong growth, can it surge again? Welcome to Stock Market News, where today we are going to talk about why NIO will be worth more than Tesla and Toyota combined. So watch this video till the end, because this one is going to be very exciting. Despite COVID situations and delisting woes, the US-listed Chinese EV startup is bringing new electric vehicles to market. Also known by the name of Tesla of China, NIO was founded in 2014. Like Tesla, NIO makes luxury EVs, but NIO does not make its own electric cars, instead partnering with a state-owned auto manufacturer. On May 18th, sources told Reuters that China is planning to extend EV subsidies, which were set to expire in 2022 since the economy slows. On May 16th, a Bank of America analyst upgraded that NIO stock is up for purchase. The bad news is, priced in, and new NIO EVs will increase growth. But earlier in May, NIO was added to foreign-listed companies that would face delisting if they don't comply with higher auditing standards by the Securities and Exchange Commission. On May 1st, NIO reported April EV sales declined 49% from March because NIO halted production as a COVID-19 resurgence in China led to strict lockdowns and hit its supply chain. Previously talking of NIO's whereabouts, on March 25th, NIO delivered a worse-than-feared loss for the fourth quarter of 2021. The whole year, NIO narrowed losses to 30 cents, while revenue jumped 126% despite production shutdowns due to the chip shortage, according to ADR. But in 2022, FactSet expected NIO to widen losses to 54 cents per share and saw revenue jumping to 71% for the year. They predicted that NIO will steeply narrow its losses to 14 cents per share in 2023 as revenue grows 70%. Wall Street sees NIO as a promising EV stock because of the sales headwinds grown in 2022. NIO increased EV sales by more than double, despite pandemic-related challenges in 2021, according to the International Energy Agency, or IEA. Out of 28 analysts covering NIO stock, 27 rated as a buy, 1 has a hold, and no one has a sell, according to FactSet. By 2030, EVs will make up 90% of new car sales in China, NIO CEO William Li forecasts. Amid hard competition, NIO expects to launch 3 new EVs this year. It began deliveries of the ET7, its first electric sedan, on March 28th, the ET5 in September, and the ES7, a 5-seater electric SUV, before year-end. NIO CEO William Li sees the ET7 as a competitor to the Tesla Model S, while the smaller and more affordable ET5 is a rival to the Model 3. NIO's premium electric SUVs include the ES8, ES6, and EC6. Not only is NIO expanding to China, but it's also growing overseas. It already sells EVs in Norway and aims to be in 25 countries by 2025. Chinese EV makers are challenging Western automakers, including Tesla, on the continent. From a fundamental perspective, NIO's financial condition is improving after debt and liquidity fears slammed shares. It has pared losses while delivering huge revenue gains and improving EV margins. New electric cars, entry into Europe, and battery innovations mean more runway for growth. But the EV wars are heating up. As the pandemic drags on, the chip supply crunch poses a headwind to NIO. Longer term, battery supplies could be an even bigger headache for EV stocks at large. Due to macroeconomic issues like inflationary pressures and interest rate hike growth, stocks have been battered recently. The automaker has supply chain issues, which lead to low deliveries and possible delisting from the U.S. exchange. NIO stock gained this week, but lost most of the gains on the same day. The stock is currently trading at $13, much lower than its all-time high. In November 2021, it was trading at $42, but was not able to impress its investors. Over the past year, NIO has narrowed down 60%, but the company's growth prospects remain intact compared to Tesla. NIO traded at a very low multiples after the recent falls in trading due to some reasons. NIO has underperformed the U.S. markets recently because of the ongoing situation in China. Firstly, China is currently seeing a surge in coronavirus cases, which has led to a very strict lockdown. Simultaneously, there are also fears that a similar strict lockdown will be imposed in Beijing, due to which supply chain disruption will be caused to suspend of the production of its cars at the start of April. Unfortunately, this means that the company's production levels may be lower than expected for the year, which could have a negative effect on annual values. However, this may seem like a short-term problem that should not have a long-term effect on the new share price. More importantly, there is the reality to that you may have its share delisted from the U.S. exchange because the Chinese stocks don't meet specific accounting criteria for foreign stock. As such, the firm has been placed under this SEC's list of potential companies that require listing, and this saw the stock sink around 15% on Thursday last week. But the EV maker already has a listing in Hong Kong and has announced a third venue opening in Singapore on May 20th. After NIO's recent fall, the new trades are at very low levels. Valuations compared to the past include a price-to-sales ratio compared to previous PS ratios of over 20 in 2020. If the stock doubles in value, it would still only be priced at $30, which is still a far cry from its all-time high. Tesla has a PS ratio of around 16, despite revenue growth being no larger than usual, unlike Tesla, which now has served 7 new models coming to the market, which may enable the firm to grow revenues at a fast pace in the next couple of years. This must be noticed that Tesla is profitable, but NIO doesn't expect profitability until 2024. Based on this truth alone, this comparison indicates the news that NIO could double in value of things. The EV company has revealed that this is when a secondary listing of its stock will take place that will have its listing shares on the main board of the Singapore Exchange Securities Trading Limited. NIO has further strengthened its footing in the global capital markets with Singapore's strategic significance, founder and CEO William Lee said. NIO confirms that it is eligible for the list. A letter from the SGX STS, as long as it meets the requirements in that letter, that its shares should be approved for trading on the exchange. It's worth pointing out that the Singapore divisions of Credit, Suisse, and Goldman Sachs are acting as joint issue managers for the secondary offering. Prime Partners Corporate Finance is also serving as the financial advisor for the offering. One thing to note about this is that NIO already lists its shares on the New York Stock Exchange, as well as launched a secondary listing in Hong Kong in March, and this makes the Singapore listing the third one for the company. This Friday, NIO made its debut on the Singapore Stock Exchange, with NIO shares opening at $16.90 in Singapore and jumping 20% in early trading, considering a rival to the sector leader, Tesla Inc., as it had laid out plans to open a local research center focused on artificial intelligence and self-driving cars. The shares listed on the Singapore will be fully fungible with the ADSs listed on the NYSE. NIO is among a collection of Chinese companies using secondary listings to reduce damage from the law passed by former President Donald Trump that could see them delisted. Talking about NIO's price, NIO closed at 5.2% higher at $16.70 on Thursday. TNEB also reported that the plant will be completed and commence production at the earliest in 2024, following comments from William Lee at their earnings call. NIO is looking at adding models in the price range of $30,000 to $50,000 to compete with Tesla's new vehicles, which are also believed to still be on track to open its second production facility in the third quarter of this year. And the second facility is expected to double new capacity for its flagship models. If NIO continues to grow production capacity and works with BYD on a brand with mass market appeal, investors shouldn't count it out as it tries to reach Tesla's and Toyota's level of deliveries in China and beyond. So, this was all about this video. I hope you liked the information given in the video, and if you have anything on your mind, feel free to comment below. Also, don't forget to like, share, and subscribe to get more videos like this. Also, hit the bell icon to get the notification of the latest updates on the channel, and thanks for watching!